right? When they're at 244,000, close to their maximum size of 266, that means they're going to have to take some profits on those positions. So that means they need people to take long positions off of them. How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was reported on April 18, 2023. Welcome back, everybody. It is Sunday evening. It's about close to 9 p.m. I've had a busy weekend looking at the CFTC data, looking at what the banks are doing, and I've got some things I need to pass on to you. So let's start by taking a look at gold. So look what we have here. Gold. When we look at the positions, we can see that they hardly adjusted their long positions. 260,000, we're still at 260,000. The only thing they did was they increased their shorts. Now this comes as price was consolidating here on the weekly chart, right up here, okay? So they increased their shorts, and what do we end up seeing? A little drop in price, okay? Not much here. We're still staying within this range, okay? If you take a look at the weekly chart, you can see that we're sitting within this range. Now, one important thing is, last week, when we took a look at what the retail traders, how they were positioned, they were 58% short, okay? 58% short. And now if we look at what they are only 52% short. So they're increasing their long positions up at these highs. Now, this is important to know because when we see things like this happen, we know that the banks are likely going to take price in the opposite direction, all right? So this opens up a pathway for a little bit of a decline to take place. Unless last minute tomorrow they do something to cause retail traders to switch their positions and start going in short last minute. Unless something like that happens, I see this potentially dropping a little bit just to get the retail traders out of those long positions and then piling into some shorts, and then price will start to move in the opposite direction. The bottom line is, when we look at what's going on here, what we can see is we got higher time frame uptrends, so we are suspecting that they will continue to push price to the upside. All right, let's take a look at oil. So lately they've been adding to their long positions, and we can see that by looking at the longs going from 289, 307, 309, 322, okay? And we know this because we can also see the big rally up in price. Remember where that move took place from? It took place from our institutional demand area. So price has rallied up. It has not contacted this area of supply, and it is stopping. So on the lower time frames, anything can really happen with price, all right? Because there isn't a major supply force coming into play. This move can be short-lived before they continue pushing price to the upside. What I do know is that when price comes into this area of supply, we would be expecting a reaction from that area, okay? All right. Moving on, we have the US dollar. And we can see with the US dollar, they're adding to their short positions from 12,000 to 14,000. And they took some slightly off of their longs, okay? Not much going on here. The only thing we know is that this area of supply came very close from being contacted, so it is likely in play. And this is why we got the bearish pressure on price here. But the thing is that when we look at the positions held by the banks, there's no clear indication as to what they're going to do with price, okay? Another thing is that, you got to look at what's happening here with the coloration of the cells. Look how long these cells have been neutral. Okay, the coloration of the cells are blue. When the coloration of the cells are blue, that means they are neutral with their position. So if they are neutral with their position, we should be neutral with their position, with our position, okay? So I'm not looking to make any moves on the dollar as of right now. All right, so now let's take a look at the Aussie. Aussie, we've been talking about this for quite some time. They're in the process of accumulating a short position within a bearish cycle. Okay, so what does that mean? Well, for the longest time, the banks have been keeping this in a bearish cycle. Okay, they've been manipulating the price of the Aussie by increasing their short positions and then decreasing their short positions. They're constantly doing this back and forth, increasing, decreasing, increasing, decreasing, and now increasing again. All right. So the next stage is likely going to be decreasing. All right. Now, one thing that I should point out is last week when we took a look at the retail positioning, they were 59% long. Okay. So they were mostly long the Aussie, 59%. And now they've increased that to 74%. 74. So they've increased their long exposure on the Aussie. So it's likely that price is going to slightly decline. Would we say with gold? Slight decline. And we do know that the Aussie dollar and gold are related. Okay? They have a positive correlation with each other. So it's likely that price is going to drop. Okay? When we look at that, it could drop a little bit further here. Just like that. Right? So we'll keep an eye on that and we'll see. The bottom line is they're manipulating price with sells. Okay? There's no focus on long positions right now, so we shouldn't be focused on getting in long. When they start to pile into long positions, then we can. I'd like to see this demand area be contacted first and then them starting to add to long positions, and that will be a strong indication that price is likely going to go up. All right, USCAD, look at this one. Look at the short positions. They're taking profits on long positions. That's the focus, okay? It's always important to understand what the focus is. The focus right now for the banks is they are taking profits on their long positions. So does that mean you should get in long? Heck no. All right? If anything, get in short. All right? Get in short. But at this moment, when we look at shorts, they're very cooled off. Look at the coloration of the cells. Very cooled off. So I'm not really interested in getting in short as well. I do think that there's a higher odds that price will drop over time, but timing the market for that drop is going to be very difficult. So it's best to just wait until the banks start piling into their short positions, and then we can start piling into our short positions. All right. Now, last week when we were taking a look at retail positions, they were 85% long. Okay, 85% long. And then price dropped. Okay, so you see what can happen. They always do the opposite. 85% long. Guess what they are now? They're 86% short. 86% short. So they switched their long positions to shorts as price dropped. Okay, and now price is rallying. Why? Because retail traders are short. What do you think is going to happen? After this rally, they're going to continue pushing price to the upside, and then what? Retail traders are going to switch their positions back to long again, and then what do you think will happen with price? Zoop. Straight to the downside. Very likely. Okay, so watch for that, because I suspect that is likely going to be taking place. US Swiss franc, listen, this chart is telling me it wants to go down, right? The bank's not really telling you that because they got 10,000 long and only 5,000 short. Okay, we look at the coloration here, and they are somewhat bullish, a little bit in the neutral area, so there's no indication that price is going to drop. But when we take a look at the charts, we can see they just removed one of their demand areas. So there's nothing to stop price from dropping here on the monthly chart. So I suspect that over time we're going to be seeing a decline in price on the US Swiss, okay? What was the retail traders doing with the Swiss last week? They were 92% long, okay? And price dropped. They were 92% long. Now they are about 90% long. So they're still long. So clear indication that this is likely going to be dropping, all right? Euro. So they increased their longs once again to 244,000. Okay, now they just took some profits. We're contacting an area of supply here, right here, for the second time. First contact was here. Second contact is right now. So we're contacting an area of supply, and they just started taking a little bit of their profits off, okay? From 244 to 242,000. Now let's take a look at what retail traders were doing. Retail traders last week were 73% short, okay? 73% short. Now they're only 67% short. So they're getting rid of their shorts, and they're starting to pile into longs. They're not aggressive with their longs yet, but they're slowly making that transition. And what's interesting is that the banks need to offload those long positions to someone, right? When they're at 244,000, close to their maximum size of 266, that means they're going to have to take some profits on those positions. So that means they need people to take long positions off of them. And that, according to the data, is what the retail traders are doing right now. Very interesting, right? So supply is in play. We're likely going to see a decline. I mean, that is the bias. It's hard to pinpoint exactly what's going to happen because we have lack of trends on the different time frames. But we have supply in play, and the banks need to take profits on long positions. So that's kind of giving me, at least, an indication that we're likely going to see some weakness in the coming week. Okay. Next is the pound US dollar. Take a look at longs 28, 46, 54, 53. Okay. They've been focusing on long positions, accumulating during a bullish cycle. That's bullish. Now, supply is in play. It's a very weak supply, but it still is in play. We contacted it once, we contacted it twice. Now I posted in our Telegram group, so if you're not a member of our Telegram group, at the end of this video, we'll give you the details of how to get there. On the Telegram group, I posted a post with respect to the pound US dollar and some of the lack of momentum shifting on the lower time frames. This is a clear indication to me from historical chart analysis that when there's a lack of proper momentum shifting off of supply, usually means that price is going to continue moving to the upside. Okay, so we could see some short-term downside moves, but longer term, we suspect we're going to see a push to the upside. Now, with respect to the retail traders, last week we saw that they were 54%, okay, short, 54% short. And now they're 70% shorts. They're increasing their shorts as price is creeping up. All right. Good indication that likely we're going to see them switch eventually to longs. And when they do that, they could push price down temporarily. When retail traders switch back into shorts, they'll push price to the upside. Okay. So be aware of that. Be aware with the retail traders increasing their shorts. I wouldn't want to be short the pound at this moment. Okay. All right. US dollar, Japanese yen. Take a look at this one. What do we see? We see that the banks were increasing their longs 68, 69, 72. If we look at the coloration, what do we see? It's bullish. Definitely is bullish. Yes. And but do I want to be going in long this pair right now? Not really. Do we have a demand area in play? Yes, we do. And this is the reason why we got this upside pressure. But the thing is that US dollar Japanese yen is going to be significantly influenced by the movement of the dollar. And we're seeing a lot of evidence to suggest that the dollar is going to be getting weaker over the longer period of time. So I wouldn't want to be getting in long the US dollar Japanese yen. Yes, demand got contacted. Yes, we saw a push to the upside. But look how far that push to the upside made it to. Right here. Didn't even contact supply. And price dropped and died. Okay? It's weak. You know, the price is heavy, like I like to say. It's heavy. It's having a very hard time moving to the upside. Okay? So I would just leave that there. I wouldn't be trading it at this time. What I can tell you is retail traders last week were 55% short. Okay, 55% short. Now they're 50% short. So it's 50-50. So they got out of their shorts and got into more longs because they saw this push to the upside. Now they're 50-50. They don't know what direction price is going to go. So, like I said, yes, sentiment is bullish with respect to the positions, but I would not be going in long the US dollar Japanese yen. All right. Last but not least, we got the Kiwi. Look at long positions. They're taking profits on those long positions. And if we are short positions, they're taking profits on short positions. And look at longs. Okay. Cooled off. Very cooled off. All right. I wouldn't want to be trading this one as well. Now, listen, we do have an institutional demand area in play, which is why we saw this push to the upside. But this push is somewhat weak. It didn't do much, and now it's coming right back down into the area. I don't like that. I don't like that weak push to the upside. It wasn't able to really do much when it came into demand, okay? That was back in what? January, February, okay? Leading into March, January, February. And if we look at January, February here, yes, there was an increase up to 22,000. But then look what happened after that. They used contract expirations to greatly reduce their long exposure. So that's not something that we'd like to see with respect to, a big move to the upside. Now, could eventually there be a move to the upside from this area? Yeah, that's possible. But it's not being backed by the data right now. So I'd prefer to wait until I see them starting to accumulate, and then I would accumulate. All right. Retail traders right now, they last week were 67% short. Sorry, 67% long. Last week, 67% long. This week, they're 80% long. So they've been increasing their longs as price has been declining down into the demand area. Okay, so the retail traders on the opposite side, wait until the banks start buying, and that's when you should get in long. Don't get in long when retail traders are getting in long. You're going to be asking for trouble if you do that. All right, that's pretty much it, ladies and gents. Thanks for joining me again. If you want more information about how to learn what we do and how we do our analysis, visit us at www.whiteoakfx.com. Thanks. Enjoy the rest of your Sunday, and we'll talk to you soon. Take care.